Very good morning, everyone. Hope you all must be doing great. And it was so good that most of the students are sending their homework. Guys, those who are not sending, please start from today itself. So I'll not give you much homework, 1 or 2 day questions per day. So please complete your homework regularly. Okay, so let us start with day 2. Today we will be discussing about the chapter salary and house property. Both are, see, in house property, generally, if I talk about salary and house property, which one is more important from examination point of view? So we generally see that from house property, the questions are quite regular. But from salary, it's not that frequent. But yes, we cannot ignore it completely. So these are, I will not say these are not important chapters. These are also important because you never know that when the question can come from salary, also in house property also. Although they are not frequently repeated, but yes, they can come anytime. So we cannot ignore them completely. So let us first understand salary chapter. And before that, we should know that what is the difference in optional regime and default regime. Guys, my voice is clearly audible to everyone. Okay, thank you, Pradeepa. Good, thank you. So let us first understand what is the difference between an optional regime and default regime as far as salary chapter is concerned. So I would like you to please write this with me. See, in salary, we receive whatever we receive from our employer is our salary income. Whether it is taxable or not taxable doesn't matter. But whenever you will get your salary question in examination, so whatever you are receiving any basic salary, allowances, perquisites, any other benefits, retirement benefits, you should make a list of all these things. So the best thing to do a question of salary is to make a list of all the things which you are getting from your employer. So let's say I'll be making this particular chart like this. One column for optional default regime, one column for optional regime. And here I'll be writing the particulars that what we are getting from our employer. First of all, guys, there are some basic concepts, basic components of salary, like basic salary. These are some of the basic concepts are always components are always taxable. So please write with me. The first one is basic salary. The second is you also, although it is one of the allowance, but it is a basic component that is called dearness allowance. Third is bonus. And fourth is commission. Commission or fees or any type of commission. Not just based on turnover, but any type of commission. It is fixed per month or it is as a percentage of turnover, does not matter. These four components, whenever you will see it, please make it fully taxable. Either you are following your optional regime, either you are following your optional regime. Let us make the first column as optional regime. And the second column is default regime. Please make these four components fully taxable. Please keep on writing with me. Same. It is same under both the regimes. Either you are following optional or default. Whenever you see your basic salary, now it depends for how many months you are getting this basic salary. If it is for complete year, multiplied by 12. But if it is, let's say, in some cases, the assessee has left the job or he has joined the job in between. So you have to calculate it accordingly as per the number of months. But yes, whenever these are you are receiving, make it fully taxable. Second type of component which we have is called allowances. Guys, what are allowances? Allowances are also part of your salary. These are components of salary. These are given with the salary. These are, I can say, these are the cash components. Every month, as you receive your basic salary, you receive your allowances also. Allowances are not in kind. They are in the form of money that it comes with your salary. So there are actually two types of allowances. One is personal allowances. Second is official allowances. Let me first talk about official allowances. What is official allowances? These are not for the benefit of the employee. They are given by the employer. They are provided by the employer so that employee can incur these expenses, these allowances on official duties only. So let's say if you are working with a CA firm, you're working with a CA firm, and let's say your firm is based in Madurai, right? You are working in Madurai. But let's say your CA firm is sending you for an outstation audit for 15 days. They're sending you for 15 days, let's say to Chennai. So there would be the cost of travel also. There would be the cost of living also which you will be spending on in Chennai. So if your CA firm is giving you some conveyance allowance, they are giving you some traveling allowance, they are giving you some daily allowances. So whether you think that it is for your benefit, the answer is no. Why? Because the company, your CA firm, the employer has sent you on official duties. So that is the reason that should not be taxable. Why income tax will tax you? You can say that this money which I am getting, I'm actually spending for official purpose. I'm not spending on myself. See, there is a very, very basic thumb rule. What is personal and what is official? Any amount which you can say it is your money, any amount which the employee can say it is my money, it is my, that is personal. Correct. So any amount which we are getting, but employee cannot say, no, it's not my money. Actually, it is for the official purpose. So that is an official allowances. That is not your income, which you can say, yes, this is my income. I can take this money at home. This is my money. I can spend on myself. That is called personal allowances. What are official allowances? I'll give you some examples of official allowances. You can write on the next page. You can leave this page. You can write on the next page some official allowances which you should remember. Official allowances. If your company or your employer is sending you outside for an audit purpose, that is called traveling allowances. Traveling allowance is an official allowance. Traveling allowance is an official allowance. What it is outstation travel. It is outstation travel. When you are outside, you are going for outstation audit. So you have to incur your expenses on hotel or on food, etc. So that is called daily allowance. Daily allowance. So generally we call them, in practical sense, we call them TADA. TA is traveling allowance because you have to travel outside from Madurai to Chennai and you have to live also there for 10-15 days. That is called daily allowances. These are official allowances. So please don't make it taxable. Why? Because you are getting it for official purpose. This is outstation travel. But let's say your CA firm is in Madurai, and in Madurai itself, you have different clients. In Madurai itself, you have different clients at different locations. So you have to travel locally also. And that too for official purpose. That is called conveyance allowance. That is local travel, local official travel. So traveling allowance is actually outstation travel. Conveyance allowance is local travel, but they both are for official purpose. You are not keeping this money for yourself. You will not. You can't take this money at home. You have to spend for the official duties. So these are called official allowances. Uniform allowances. Uniform allowance. Uniform allowance is that, let's say there is a factory and people are supposed to wear a particular dress code. So company gives them some money so that they can purchase their uniform for official purpose. So that is called uniform allowance. Research allowance. Some scientists are getting this money so that they can research for official purpose. Helper allowance. What is helper allowance? Let's say you need an assistant for your official duties. You need one more assistant for your official duties. So you ask your employer, can you please provide me an assistant? I need an assistant for my official purpose. Let's say you are a marketing executive, but you need one more person who can drive the bike and then you can sit. So you need an assistant. That is for official purpose. So it is the company responsibility that they should give you assistant. But let's say they say, okay, we will not be able to give you assistant. Why don't you hire your assistant yourself? Hire your assistant yourself, and whatever salary he will take, you can take it from us as an helper allowance. So let's say we need one assistant. We have hired an assistant for 5,000 per month, and we are taking 5,000 per month from the company. This is what? Is it for my personal purpose? No, it is for the official purpose itself. These are official allowances. So whenever you see these allowances, these are exempt. These official allowances are exempt. Guys, have you written this? Very good. These are exempt under both the regime, whether you are following optional, whether you are following default. So please write it down that official allowances are exempt. These are exempt under both the regimes. However, if you actually don't spend the money for official purposes, or you spend less money for the official purposes and you save some money. For example, helper allowances. Helper allowances, you are paying to helper 4,000, but you are getting from the company 5,000. So any saving, if there is any saving, then it will be taxable. So official, because that 1,000 you are taking home, that 1,000 you are saving, you can say now it's my money. So if you are keeping that money with yourself, so any saving is taxable. So it is exempt, although, however, any saving is taxable. First of all, tell me, have you understood any saving is taxable? What do you mean by saving? Everybody? Good. And guys, in both the regimes, very good, Pradeepa, Satish, Aditya, very nice. So in both the regime, it is same. Still, I am writing it here, also same. Default regime, also it is same. But what is personal allowances? Personal allowances is something which you can take to your home, which is your money, See, right here, personal allowances. Which you can take to your home. This is traveling. This is conveyance for official purpose. But what about transport allowances? Transportation allowance. Transportation allowance is the money which is given to you so that you can travel between your home to office and you can come back. Transport allowances. See, it is your responsibility to go to the office. But still, if the company is giving you money that you can travel between your home to office, so this is a personal thing, but still the company is giving you money. So might be possible that the employee is living next door. He's just living in next building and he's just walking and going to the office, but still he's getting a transport allowance. So that is a personal allowances. That should be taxable. Even if you are spending some money also on transportation, that doesn't matter. That doesn't matter. But this is your money. This is the extra money which you are getting for yourself. It is not for the official purpose. You're not doing any official duties. It is your responsibility that if you have joined a job, then you should reach there on time. But they are giving you something extra. That is called transport allowances. Transport allowances are generally taxable. I will tell you only for physically handicapped SSC, they could be exempt, but generally they are taxable. Guys, what do you think about overtime allowance? Overtime allowance should be personal or official? Your thoughts. Overtime allowance. It should be P or O. It should be P. Okay, I have written it over here. It is actually personal allowance. Why? Because if you have worked overtime, that's okay. But the money which you have received, you can take it to your home. You can say that it's my money. So it's overtime allowance is a personal allowances. Same way it is helper allowances. What about servant allowance? Servant allowance. Servant allowance is domestic servant. You are getting domestic servant allowance. So this is again personal. So servant allowance is personal allowances. Overtime allowance is personal allowances. Transport allowance is personal allowances. There are so many personal allowances like HRA, like children education allowances. Very important, lunch allowance. Lunch allowance or meal allowance. Guys, medical allowances. Please write medical allowances. Now, also please understand, there is a difference between lunch allowance and lunch facility. Lunch facility is a perquisite. What is lunch facility and lunch allowance? See, lunch allowance is, the allowance is something. The common thing about allowances is that they both are in the form of money. Allowances, whether they are personal, whether they are official, but they are in cash component only. They are in the form of money. So whenever you see allowances, allowances are always in the form of money. So guys, what is lunch allowance and lunch facility? See, lunch facility is that your employer is providing you meals. You can go in the afternoon to have lunch, or you can go to if it is a night shift, dinner, they're providing. That is in kind. That is called lunch facility. Lunch allowance is they are giving you money. They are giving you money. Whether now you are spending it on lunch or dinner or not spending, it doesn't matter. Lunch allowance is in the form of money. It is always taxable. Medical allowance. There is a difference between medical allowance and medical facility. Medical facility is what? The family member or the employee got admitted into the hospital and we are treating them. An employer is actually spending the money on the treatment. Actually, someone is ill, someone is hospitalized, and the company is giving the facility for the treatment. That is called medical facility. On the other hand, what is a medical allowance? Let's say allowance is something which is given to us regularly, every month. So let's say somebody is getting medical allowances 3,000 per month. So whether this person is ill or he's not hospitalized, nothing, he's healthy also, but still every month he will be getting 3,000 per month. That is called medical allowances. These allowances are always fully taxable. So please understand there is a difference between perquisites and allowances. Perquisite is something which you actually take it and you are availing that facility. Allowances are part of salary only every month. They are for purpose that they are given for, see, if it is medical allowances, the name will suggest that it is for medical treatment. But it is not necessary that you will be spending for medical only. See, every month if we are getting, and if the person is healthy, so why are you spending on medical purpose? Right? You are getting lunch allowances. It doesn't matter that whether you are taking lunch or not. It's a lunch allowance. Lunch allowances should be, or any other personal allowances should be taxable. Guys, have you written this also? Good. Personal allowances. See, if I talk about default regime, if I talk about default regime, personal allowances are always taxable, always fully taxable. They're always fully taxable. However, in optional regime, there is a difference. In optional regime, few personal allowances, few personal allowances like HRA, children education allowance, hostel allowance, not that important. These three are little important. HRA, children education allowance, hostel allowance, outstation allowance, and underground allowance. These could be exempt, but I'm telling you, out of this, only HRA, children education allowance are important. Few allowances are exempt up to certain limit. But if you get HRA, if you are computing HRA in default regime, please make it fully taxable. If you are computing children education allowance under default regime, make it fully taxable. Hostel allowances, make it fully taxable. Here, it could be exempt up to a certain limit. I'll be telling you with the question. Other allowances are fully taxable. Only few are exempt. Other personal allowances are taxable. So generally, if somebody will ask you that what is the tax treatment of personal allowances, so generally, whether you are following default, whether you are following optional, you should say it is fully taxable. It is fully taxable. Only in optional regimes, only some personal allowances are exempt. Have you understood this much also? Then we have perquisites. Then we have perquisites. Some of the important perquisites are rent-free accommodation, or the same way concessional rent accommodation, that is almost same. Rent-free accommodation, RFA. Second is motor car facility. Third is education facility. Interest-free or concessional loan. Use of assets. Sale of asset at discount or at lower value. These are some important perquisites which are often repeated. So we should know about them. Treatment is, they are generally taxable. They are generally taxable. And treatment is same in default regime also. So perquisites treatment is same. Only one perquisite is there. That is called leave travel concession. Leave travel concession. That is exempt up to certain limit. But here it is fully taxable. Leave travel concession in default regime, it is fully taxable. And under optional regime, it is exempt up to a certain limit. What is that limit? Just you should know this. If the assessee has traveled by air, then economy class airfare economy class fare, or if the assessee has traveled by other mode, generally you should know that first class rail fare can be exempt. If the assessee has traveled by air, then economy class, other mode, first class rail fare. Generally, you should know at least, although there are a few more points, but at least you should know this. Even if you know this, then 95% things would be done. Generally, we have four things in salary. One is basic components. This is basic components of salary. Second is allowances. This is first. This is second is allowances. Third is perquisites. And the fourth part is retirement benefits. The fourth part is retirement benefits. The treatment of retirement benefit is same under both the regimes. It is same under both the regimes. Some of the important retirement benefits are employer contribution to recognized provident fund. Treatment is same of retirement benefits for both the regimes. First is employer contribution to RPF. It is exempt up to 12% of salary. You should know this. I'll be discussing a question on this today. So it is exempt up to 12% of the salary. Salary here means basic salary plus DA forming part plus fixed percentage commission on turnover. Yes, fixed percentage commission on turnover generally you will not get. You will get only basic salary plus DA if it forms part of retirement benefits. See, if in the question it is written that it forms part, then please take it. If it is not written in the question that it does not form part, so please don't take that DA. So we take only that DA which forms part of retirement benefits. So I'm not discussing what does it mean forms part of retirement benefit right now. So we have to do other things also. But yes, as of now, for examination purpose, just remember that if it forms part, then only you have to include. If it nothing is mentioned in the question that how much it forms part, so you will take it 0. You will not take it. Only if it forms part of retirement benefits. Have you written till here? Very good, Deepa. Deepa, Gomti, good. Deepa. Very good. Logita, how are you? Satish, good. Now, second is, see, employer contribution to RPF is very, very important. Sometimes they can give you, and guys, the treatment is same. I'm telling you. So here also you can write the treatment is same in both. So for retirement benefits, you don't have to worry. Generally, if I tell you overview of it, so generally in allowances, and that too personal allowances, the treatment is little bit different in salary. So in personal allowances, that see in default it is fully taxable, but in optional, some of the personal allowances are exempt. Here is a little difference. Otherwise, if you will see on basic components, there is no difference. Perquisites, generally there is no difference except leave travel concession. Retirement benefit, there is no difference. So it is only personal allowances. There is little difference between optional and default. Otherwise, everything is almost same. Employer contribution to pension scheme. Employer contribution to pension scheme. Guys, please understand. Here, examiner can ask you. So either he is giving RPF contribution or pension scheme contribution. The treatment is little different. See, in RPF, in salary itself, it is exempt up to 12% of the salary. But if it is employer contribution to pension scheme, please make it fully taxable. Fully taxable under salary. And it is same. Please make it fully taxable. And thereafter, in deduction, while computing GTI, after computing GTI, thereafter we give deduction of 80 CCD 1, 1B and CCD 2. So please, if it is pension scheme, first of all, make it fully taxable under salary. There is no problem in salary. Whatever is the employer contribution to pension scheme, please make it fully taxable. Thereafter from GTI, you have to give deduction of 80 CCD. I will be explaining 80 CCD in my deduction chapter day 5. However, in option default regime, it is fully taxable, but from GTI, only 80 CCD2, that I'll be telling you in the chapter of deduction. So don't worry, as of now, just write it. CCD1 and 1B is not available in default regime. So only CCD2 deduction is available. So that you will get to know in the chapter of deductions. But my point here is regarding salary, if it is employer contribution to RPF, so here itself in salary, there is some exemption up to 12% of the salary. But if it is employer contribution to pension scheme, whatever the employer is contributing towards pension scheme, please make it part of your salary fully. And there is no problem in salary. Please just make it taxable. That's it. Don't give any deduction. No deduction in pension scheme. But yes, after GTI, see, we have computed salary, PGBP, capital gain, IFRS, etc. After GTI, there is 80 CCD deduction. Then pension is there. Pension. Guys, if it's a regular pension, which we call it uncommuted. This is called regular pension, which you receive per month. It is fully taxable. Same. But if it is commuted pension, lump sum pension, it is exempt. There is a limit to it. Same. So you understand, if the gratuity is received 1/3 of the pension or 1/2 the pension, that will be doing. So uncommuted pension means regular pension. Regular pension is always taxable. So please understand, this is important. They generally give this regular pension. So please, regular pension, make it fully taxable under both the regimes. Then we have other retirement benefits also, like gratuity and deep salary. Again, these are exempt up to certain limit. Same. So once we are getting these things from an employer, make the list. Make the list. Once we are getting these things from the employer, make the list and then do the total. You will get gross salary. You will get this gross salary. From this gross salary, you have to give certain deduction, and the most important deduction is standard deduction. how much is the standard deduction? Gross salary or 50,000. So generally 50,000 would be there. So in optional regime, it is 50,000 maximum. But in default regime, it is 75,000. So please remember, guys, there is a change here. Standard deduction in default regime, please give 75,000. In optional regime, please give 50,000 maximum. I believe you must be knowing this. Minus tax on employment. And please write it on payment basis. On payment basis. So any tax on employment, if you have given, on tax on employment, if you have given, it is allowed here. It is allowed here, but in default, it is not allowed. So please cut in default. It is allowed here. So payment basis, and whether, very, very important, payment basis, whether the employee is paying or the employer is paying. Payment by both. By both employee and employer. But please remember, regarding employer, if employer is paying, if the employer is paying, so first it will become your perquisite. So let's say you have paid 1,000, employer has paid 2,000 during the year. So you will get the deduction of 3,000. That's okay. But this 2,000 should first be part of your gross salary. Whatever the employer is paying, because it is your duty to pay these taxes on employment. But if your employer is paying, so it will first become your salary, and then deduction can be allowed. No problem. So let's say 1,000 you are paying, 2,000 employer is paying, get 3,000 deduction. But 2,000, whatever the employer is paying, first of all, make it your salary. See, here also, you will not get the deduction, but obviously if the employer is paying, it will become your perquisite in default also. So whatever the employer is giving to us, it will become our taxable income under both the regimes, but deduction you will not get it. And there is one more deduction which generally will not come because it is very, very narrow. It is for very specific SSC, only for central government, state government employee, that too under optional regime. So generally you will not get it. That is entertainment allowance deduction. Entertainment allowance deduction. Here you will get it, but here you will not get it. And after that, you will get your salary income. I believe that you have written this. Let us come to a question now. Very good. Very nice. Guys, I understand. See, salary chapter altogether is quite a big chapter. Anyways, it's quite a big chapter. And the problem with the salary chapter is that the definition of salary also changes. In gratuity, it is so different. And in other parts, in RFA, it is different. In other things, it is different. So there is a little challenge about it. So please don't worry about it. Salary chapter is not that important chapter also that it always comes. So it might be possibility it will not come. But otherwise, it will, if it will come also. And if you are not fully prepared also, I know that there are some students who are fully prepared for it. There are few students who are not that prepared for it. So don't worry about it. Even if you know these things, you will be able to do at least 60-70% of the question. You will be able to do at least 60-70% of the question. We will get that 60-70% marks in that also. So don't worry about it. So students who are, those who have studied salary in detail, everything they have written, they have made notes. So they would be getting full marks for sure. But the students who have not that, now they have done it quite early and now it's been a long time that they have not done. So don't worry about it. Don't worry about it. We don't have to get 100% marks. Even if it is 60-70%, we are good enough. And I think most of the students are good enough if it is more than 50, right or not? So don't worry about it. So in fact, if you know this much also, you will be able to secure 60-70% marks in salary. Because salary, the problem is it's not difficult. salary is not difficult, but it is very voluminous. There are so many things. The definition gets changed here and there. The exemption amount is different in most of the things. So little bit challenge. But still, if you will practice today, we'll be practicing. I'll be giving you some questions. You will be feeling, you will feel very comfortable. You'll be able to achieve 60, 70%, 80% also. Now, look at this question. Question number 1. Mr. B is a sales manager in PQR Limited. During financial year 24-25, he received the following towards his salary and allowances and perquisites. So he is receiving these following things. And what we need to calculate, so I always tell you that whenever you will look at the question, you should first look at it that what the examiner is actually asking from us. So here, you are required to compute the income chargeable to tax under the income from salary, assuming he does not opt for the provision of 115 BAC. So 115 BAC is not opting, that is optional regime. Okay. What will be your income under the head salary if he opts for the provision under the section 115 BAC? So they are actually asking for both, that please compute as per optional regime, as per default regime. Correct? So generally in the chapter of salary, I will tell you that if they are asking under both the regimes, although they will ask by one only, but still, if they ask by both, so please make 2 columns. One for default, one for optional. One for default, one for optional. Guys, it's not universal that you should make 2 columns. But for the chapter of salary, you should make it. But for total income question, the first question which you will get 15 marks, I will not ask you to make 2 columns. That I'll be telling you in day 7 to day 10. So that, so don't worry about it. But here in the chapter of salary, I would suggest, if it is salary and you have to give your answer under both the regimes, so it is better to make 2 columns. Okay. So we now understand that this question is pure salary. They are asking us to compute the salary income as per both the regimes. So guys, whatever I am getting, right now I'm not even reading it. I will be start making the list of it. Correct. So this is how the approach should be. So everybody, with me. Solution number 1. Computation of salary income. Whatever is the name of the assessee. Assessment year 25-26. And since we are required to compute as per both the regimes, so we'll make 2 columns. Optional regime, default regime. So first I have written optional, then default, and there is no hard and fast rule. You can write default first also and optional also. So there is no hard and fast rule for this. Now, start writing. I'm again and again saying in the salary question, just start writing whatever we are receiving from our employer. Whatever we are receiving from our employer. Basic salary, basic pay or basic salary, 85,000 per month up till December, and thereafter an increase of 2,000 per month. So we are getting basic salary, but right now I'm more concerned with the component, only the component. So I will write basic salary. We are getting basic salary. Okay. If you want, you can leave one line in between in all these things if you want, because it might require some calculations also. So if you want, you can start from the next line, in fact, or if you want, you can leave one line in between. In examination, I would suggest leave one line in between. Dearness allowance, 40% of the basic pay forming part of retirement benefits. So forming part right now doesn't need DNS allowance I am getting. So I will write DNS allowance. Then third is bonus, 1 month basic pay based on the salary drawn during January every year. So I'm not reading all these things in detail right now. I'm more concerned with what are the components which I'm getting. So in the third one, I got to know that we are receiving some bonus also. What is the amount? Right now, I'm not concerned. I will write both. So see, right now, though I'm explaining it to you. So I'm taking time. I'm reading it, explaining, and then I'm writing. But once you are will be practicing, you can straight away. It will not take much time. Within not more than 1 minute, you will able to fill up at least the components which you have getting from the employer. Guys, I'm telling you, if you are through with this, forget about this right now. If you have done it correctly, and even if your final answer is not correct, guys, you will get maximum marks. You will get very good marks. More than 50% marks you will get it. So although some of your component might be, the calculation might be, there might be error also. But still, if you have written this, if you have made this list, you will feel that yes, this question is in your grip now. Right? Okay. Mr. B. He contributes 14% of his basic pay and DA towards his RPF, and his employer company contributes the same amount. Okay. The employee is also contributing and the employer is also contributing to where they are contributing? They are contributing to RPF, Recognized Provident Fund. Okay. Yes, tell me, everybody know that out of these two, which is our income? Employee contribution or employer contribution? Is it employee contribution or employer contribution? Do you know it or you don't know it? If you don't know, please tell me. Anybody who doesn't know about it, has no idea about it, please right now, please tell me. And if you'll not tell me, I'll assume that you have an idea of it. Anyone who does not have an idea, I'm saying, tell me, I'll ask me, I'll tell you. Okay. Oh, everybody, na? Clear, na? Employee contribution is not our income because it is actually a part of the salary only. It is rather an investment, and only employer contribution is our salary. So it would be employer contribution. RPF. Employer contribution to RPF. Then we have fourth. Fifth is traveling allowance. Okay. So we are getting traveling allowance. Then children education allowance. Okay. Then accommodation. Accommodation owned by PQR Limited was provided to him in Hyderabad for the whole year, and furniture was also provided. So two things are provided. Accommodation is also provided and furniture is also provided. So let us write them separately. And is some is it rent free or some amount is taken? Accommodation owned by PQR was provided for the whole year, and furniture this. No, nothing has been taken from the employee, so it's a rent free accommodation. Rent free accommodation, and also furniture facility. Some people might also club it as a furnished accommodation. And to make it simple, I've just written it separately also, and it is also 100% right. Then, eighth point is reimbursement of medical expenses on his treatment in the private hospital. So there is some medical treatment has been done. So it's a medical treatment facility. Medical allowance 1500 per month. Oh, there are, see, in this point, there are one or two things. One is reimbursement of medical expenses on his treatment. On his treatment, the employee is getting treated and he is getting the hospital bill reimbursed from the employer. This is called medical facility. This is called medical facility. It's a perquisite. So he's getting medical facility. Then it is also written medical allowance 1500 per month. He's getting medical allowance also. I told you now there is a difference between medical facility and medical allowance. So medical allowance is something which you can get on regular basis. See, he's getting monthly. Medical allowance is also we are getting. And company has paid premium on medical policy purchased on this health. So company has paid a health insurance premium also for us. This is also a facility. Health insurance premium the company is paying. So it is health insurance premium. Okay. I think that's it. Now the question is almost over. So we are getting, now you have made a list of it, that these are the things actually we are receiving from our employer. And now we have to, now our job is to just fill up the amount, that how much amount would be taxable. Guys, what do you know about basic salary, DA and bonus? Tell me about first three. What do you know about it? Is it exempt? It is taxable, partially taxable, fully taxable, what it is? Very nice. Very nice. It is fully taxable. So whatever the amount we are getting is basic, DA and bonus. Whatever we are getting, it is 100% taxable. Very nice. Very good. So basic salary is, so now we have to see that how much we are getting. So basic salary is 85,000 per month up till December. And thereafter there is an increase of 2,000. So it became 87,000 after December. So till December, 9 months. January, February, March, 3 months more, 87,000. So we are getting basic salary 85,000 into 9 plus 87,000 into 3. In both the cases fully taxable. How much it is? Is it 10? Correct. 10 lakh 26,000. Correct. Aditya, Kishore, Logita, Deepa, good. So it is 10 lakh 26,000. Okay. DNS allowance. They are saying that DNS allowance is 40% of basic pay forming part of retirement benefit. Guys, right now forming part of retirement benefit does not make any sense right now. But when you are making your DA taxable, so just see how much DA we are getting. How much forms part does not affect right now. It will be taken care of only in some definitions. Only in some definitions in the when we will be calculating the salary component or any other thing, then we will be taking it. Otherwise, DA is fully taxable. So don't get confused with forming part right now. So whatever is the DA, make it taxable. So it is 40% of it. 410, 400, correct? Deepa? Correct. Very nice. So it is 40%. 410, 400 under both the regime. Okay. Now, they are saying third thing is bonus. Bonus 1 month basic pay. Bonus is 1 month basic pay based on the salary drawn during January month every year. What do you think? What should be the amount of bonus, guys? What do you think the amount of bonus should be? Is it 85 or 87? Very, very good. It should be 87. Correct? It is 87. It is based on the January salary. And January salary was 87,000. Till December, it was 85. Very good. So bonus is 87,000. Fully taxable. Now, employer contribution to RPF. So first of all, see how much employer is contributing. So employer is contributing 14% of basic salary and DA towards RPF, and employer is also contributing the same amount. So they are contributing 14% of basic and DA. Okay. So just first of all, because right now we know RPF is not fully taxable. Guys, if this would have been not RPF, if this would have been pension scheme, I would have made it fully taxable. I would have made it fully taxable right now. And then 80 CCD, etc. it will give in after deduction, after GTI. But this is RPF. RPF deduction is right here. In salary itself, we will give the deduction. Right here, we will give the deduction. How much? Up to 12% of salary. Okay, first of all, basic pay plus DA 14%. First of all, let us see. Correct, Akshay, 12% we will give. So first of all, we are getting how much employer is contributing. Just first of all, get to know the amount that how much employer is contributing. So he is contributing 14% of basic salary plus DA, 10,26,000 plus 4,10,400 into 14%. 201,096 you told me. Good. 201,096. Okay. This much is employer is contributing. And how much is exempt? Up to 12% of retirement benefit salary, which is basic salary, DA forming part. And guys, how much DA forms part over here? DA is 40% of basic, forming part of retirement benefit. It means that all DA forms part. They are saying forming part of retirement benefit. It means that entire DA forms part. Okay. Plus fixed percentage commission on turnover. So we don't have commission on turnover. So it is exempt. Right here, we will make it exempt. How much? 12%. 12% of basic salary in DA same. 10,26,000 plus 4,10,400 you can write. And I think 28,728. Am I right, guys? After deducting 28,728 would be the amount. Is it right or wrong? Correct. Kishore is saying 28,728. Correct. So I have directly subtracted it. Now, traveling allowance. Everybody is, first of all, tell me everybody is clear till here. Very good. Very good. Satish, Siddharth, Joseph, Kishore, Logita, Aditya, Gomti. Very nice. Very good. Now, traveling allowance. We are getting traveling allowance 5,000 per month towards on duty tours. Tell me what I should do of traveling allowance. Tell me what I should do for traveling allowance. It is an official allowances and nothing is being saved. So it is an exempt amount. So I will write it exempt. Children education allowance. Children education allowance. See, children education allowance under default regime, it is fully taxable. But here it is exempt up to 100 rupees per month per child. Maximum 2 children. So children education allowance is exempt under optional regime, but it is fully taxable under default regime. So we are getting 600 per month per child for his 2 sons and 1 daughter. So we are getting for 3 children, 600 per month per child. Okay. See how you should do it. 600 for first child, 600 for second child, 600 for third child. So we are getting total 1800. See, 1800 into 12. First of all, 1800 into 12, 21,600. Here it will be in default regime, it would be 27,600. I believe, no doubt on it. Correct, Kishore. Together correct. So in default regime, it will be fully taxable. But in optional regime, it is exempt up to 100 rupees per month per child, maximum 2 children. So for first child, we will exempt 100. For second child, we will exempt 100. For the third child, we will not exempt anything. 0. So actually, it would be 500, 500 and 600. So it will become 1600. 500 per month, 500 per month, 600 per month taxable. 1600 would be taxable. 1600 into 12, 19,200. I believe that you got it. So children education allowance under optional regime 19,200 and there it is 21,600. Guys, hostel allowance is 300 per month. Hostel allowance, if this would have been hostel allowance, here fully taxable, but instead of 200, 300 would be exempt for maximum 2 children. Rent-free accommodation. Rent-free accommodation, I will suggest you, please do at the last because it needs other allowances, etc. also. So rent-free accommodation, I will suggest you keep it for last. So let us leave rent-free accommodation for the time being. Furniture facility. Guys, please remember, when you are getting, it's a common thing. Whenever you are using any asset, please write it somewhere in the margin. Whenever you use any asset of the employer, it's a general thing that whenever you use any asset of the employer, you are using it, you're not purchasing it, you're using it. It's a general thing. The perquisite would be here, the perquisite would be if it is owned by the employer, then it is always 10% per annum of original cost. Not of written down value, of original cost, of original actual cost. And if it is hired by the employer, then actually the actual hire charges. I'm not saying whichever is more. No, it depends. If it is owned by the employer, 10% per annum of the original cost. If it is hired by the employer, higher charges. That's it. It's a perquisite. And obviously, if any amount is recovered from the employee, then you will subtract from it, right? Because that is actually reducing my income. Why we are paying something also. So it's a thumb rule. Whenever you will using any of the asset of the employee, so please make it taxable. However, please note, use of computer or laptop is not taxable. So whenever the company is giving you computer or laptop, even if the examiner was trying to confuse you by saying that assessee is enjoying a laptop or a computer and his son is playing video games, his family is watching movies on that computer, does not matter. So if they given a computer to you, why they give a computer laptop to you? So that in the night they can call you and ask you, please make this presentation, please complete this Excel file, and so whenever they give you computer or laptop, we will not make it textable. Even if the examiner will try to confuse you, the family is watching movies, doesn't matter, doesn't matter, right? So it is always text free. Now, if you will see, accommodation owned by PQR, so we have left the accommodation for the time being, for the whole year, and furniture of rupees 2 lakh was provided from 1st October 2024. So right now I'm concerned with furniture. Furniture of 2 lakh was provided from 1st October 24. Can you tell me what is the perquisite value of furniture? Just of furniture. Have they provided for the entire year? No. They have provided from 1st October. So what would be the value of the furniture? If anybody can tell me. How much would be the perquisite value? So the employee is provided with the furniture and the furniture cost was 2 lakh rupees. See, 10,000 Aditya, correct. Very good, 10,000. See, now it is owned by nothing is written that it is hired, so we'll always assume owned, correct. So 10% per annum of original cost, it is 20,000, but it is for 6 months, 10,000. So furniture facility is 2 lakh into 10% per annum into 6 months. So it is actually 10,000, 10,000. Guys, please write a note regarding medical facilities also. This is important. Medical facility also. This is important. See, for medical facility, if it is government hospital or employer hospital, if it is government hospital or employer hospital. Second thing, if it is other notified hospital for prescribed diseases. Prescribed diseases are very dangerous type of diseases like cancer, tuberculosis, etc. Cancer, tuberculosis, etc. Or it is either the treatment is in government hospital, employer hospital, other notified hospital for prescribed diseases, or health insurance. Or health insurance. Only these are exempt. So only these are exempt for family. Only these are exempt for family. And family means self, spouse, children, parents, brother, sister, if dependent. That's it. Guys, all these things, condition should be satisfied. Then only it is exempt. If it is not a government hospital, neither an employer hospital, nor for prescribed disease, make it taxable. Only in government hospital it is exempt, employer hospital it is exempt. But if the treatment is for mother-in-law, father-in-law, they are not family. Please make it taxable. If the treatment is of any uncle, cousin, etc., make it taxable. Even if it is in government hospital or other employer hospital. So only these are exempt provided it is for family. Health insurance is exempt only for them. Or other notified hospital prescribed disease only for them it is exempt. If you tell me anything apart from it, if you tell me anything which is not here, it is taxable. Family should be here, this one only. If any other member is getting treated, make it taxable. So anything which is falling here is exempt. Anything which is not falling here is not exempt. Have you written it? Good. Now, reimbursement of medical expenses on his treatment, self treatment in private hospital, 15,000 rupees. Tell me guys what I need to do is 15,000 rupees is the treatment in private hospital. Is it exempt or taxable? Private hospital, and it is not written that it's notified, it's not written. If it is notified, it should be for prescribed disease. So here it will be fully taxable. Very good. Very nice. I hope guys you know it already. So 15,000, 15,000. Very good. Now, medical allowances. See, medical allowances are personal allowances. They are fully taxable. So 1500 into 12. 18,000, 18,000. Fully taxable. Correct, Deepa. Now, company has paid premium on medical policy purchased on his health 12,500. What about this? Premium on purchase of health insurance 12,500. Health insurance premium is exempt. Life insurance premium is taxable. Only health insurance premium is exempt. Only health insurance premium. So it is exempt. Now we are just left with our RFA, and then we will compute our gross salary. We're left with RFA, and then we'll be computing our gross salary. Guys, please with me write RFA. Rent-free accommodation. Rent-free accommodation. See, for government employee, there is no problem. RFA is value perquisite is equal to license fees. So what is license fees? It will be given to you. In your question itself, it will be given to you. So for government employee, there is no problem. For government employee, there is no problem. For other employees, and generally you will get for other employees. For other employees, you will get. And if it is for other employee, if it is hired, then you will take the perquisite is equal to A, actual hire charges, or B, 10% of rent-free accommodation salary. So actually it is 10% of salary, but the salary definition is little different. So that is the reason I'm calling this salary as RFA salary. Salary for the purpose of RFA. Salary for the purpose of RFA. So I've given this name RFA salary. Understood? Whichever is lower. If it is hired, actual hire charges or 10% of RFA salary, whichever is lower. What is RFA salary? It is actually 10% of salary. This salary definition is very, very specific for RFA. So this is salary for the purpose of RFA. I'm calling it RFA salary. If it is owned, so if the population, if it is owned, then it depends on the population of the city. And the perquisite value would be, if the population is up to 15 lakh, 5% of salary, or it is more than 15 lakh up to 40 lakh, 7.5% of salary. And if it is more than 40 lakh, it is 10% of salary. And guys, concessional amount also is very, very easy. So see, this is the perquisite value of rent-free accommodation. So first compute RFA, and anything, if it is recovered from the employee, subtract that. Now, salary for the purpose of RFA. Now, salary here means this is what salary for the purpose of RFA. This is RFA salary. Salary here means basic salary plus DA forming part plus all taxable allowances plus all bonus plus or commission. Generally, we include everything except perquisite and retirement benefits. So in RFA salary, we don't take perquisites and retirement benefits. Guys, this definition is not that difficult. I'm telling you, you don't have to learn it. Just read it once or twice and that's it. Then whenever we will be actually doing our question will tell us that what we need to take. Just remember that we don't take perquisite in RFA salary. We don't take retirement benefits. Otherwise, generally we take everything. We don't take perquisites. We don't take retirement benefits. Otherwise, generally we take everything. Now, let me know if you have done it. Good. Now don't learn that definition. First of all, tell me when we'll be computing RFA, whether I would just not be taking my retirement benefits. I'll not be taking my perquisites. Basic salary I will take. DNS allowance forming part I will take. Bonus also I will take. What about employer contribution? Should I take it or should I not take it? Employer contribution to RPF. No, because it's a retirement benefit. So I should not take this. Allowances I will take. Whatever is taxable allowances I will take. So it is not taxable. So it's not taxable. I'll take 0. Children education allowances I will take. Rent-free accommodation is what I am. Furniture facility. Should I include furniture facility? Yes or no? No again. It's a perquisite. No. Medical facility. It's a perquisite. No again. Medical allowances. Yes, allowance I will take. Health insurance premium, it's a perquisite. No. Understood? So just remember that you should not take your perquisites. You should not take your retirement benefits. Otherwise, everything you can. So you don't have to learn it. Your question will tell us that what you need to take. Now, let us see whether this accommodation is owned by the employer or hired by the employer, and we will do it accordingly. Now, they are saying accommodation owned by PQR Limited. So it is owned by the employer. So if it is owned by the employer, so it depends on the property. See, if it is hired, then it would be actual hire charges or 10% of the salary. But if it is owned, 5%, 7.5% or 10%, depending on how much populated that city is. So if it is more than 40 lakh, highly populated. If it is up till 15 lakh, less populated. 15 to 40 lakh, moderately populated. So 5%, 7.5% or 10%. So accommodation owned by PQR Limited was provided to him in Hyderabad for the whole year. And furniture. Now furniture I have done, but this accommodation is provided for the whole year. Okay. Please tell me, Hyderabad, the population is not given. So now you can take the assumption. And guys, I will suggest you take the highest population assumption. So here we will assume that the population of the city is more than 40 lakh. India is a very populated country. Most of the cities have population more than 40 lakh. So generally, you will get a city which is quite a famous city, quite tier 1 or tier 2 city. Generally, they are highly populated. So please take them assumption. Otherwise, generally they will give it to you. In case they will not give, then please take your assumption highly populated. So here RFA will make a working note. We'll make a working note number 1 for RFA. And see, gross salary I give standard deduction. So I will need some 3-4 more lines. Now I can actually make my RFA. Working note. Rent-free accommodation. And the value of the perquisite risk, because it is owned. So it will be taking 10% of salary. Assume population more than 40 lakh. We are assuming population. If you want to assume between 15 to 40 guys, you can assume. In that case, please 7.5%. 100% it is correct. 100% it is correct. If you want to, if the population is not given, then I would suggest please try to assume the highest one. Otherwise, if somebody has assumed 15 to 40 also, that is also not wrong. It is also correct. So 10% of the salary. Now, guys, it is important. See, this question is no problem because this rent-free accommodation is provided for the entire year. If in your examination, rent-free accommodation is provided not for the entire year, but for part of the year, so please only take salary only for that part where you are availing this facility. So let's say this facility is availed from November till March. So you have to take the salary also of that period only, November to March only. I believe that this is very much clear to you. So here we have no problem because it is provided for the whole year. So we can take it fully. But in case if it is provided for part of the year, for few months, then please take the salary also for that month only. Now, guys, RFA will have little change in default and optional. Why? Basic salary is same, DA is same, bonus is same, traveling allowance is same. Children education is little different. So because of this allowances, I have to include RFA value would be different in both the regimes. Have you understood this or not? Then medical allowance, everything is same except children education allowance. Correct? So because of it, there will be difference. So what I'll do is, I would like to save my time, your time in examination. So we will add it at the last so that we can see that how much is the other component and how much is this. We will add it separately. Okay. So under optional regime, the RFA value would be something different. So it is basic salary. We will take 1026, DNS allowance, bonus. 10,26,000. DA forming part. Entire DA was forming part. Tipa has calculated this for me. 410,400. Thank you, Tipa. Bonus 87,000. Then traveling allowance, children education allowance, I'll keep it separately, and 18,000. And then I will add separately 19,200 also. So I don't have to do this exercise again. And this into 10%. So how much is the total for this? 10,26,000 plus. No problem, Tipa. If it's wrong also, no problem. It's a calculation error. This total is coming as 15,41,400 plus 19,200 into 10%. I think I'm also getting the same thing, Tipa. 5,156,060. Akshay, same na? Good. And under default regime, see 15,41,400 is same. There it was 21,600 na? Into 10%. Yours was correct. Correct. Aditya, correct. Very good. Everybody has done this. Now we'll keep it over there. So here it is 156. Here it is 156,300. And here it is 156,060. Then we are not wasting the time. You can do the total after the class. So you will get the gross salary. But standard deduction, guys, here you will get 50,000 and there you will get 75,000. And we will get the salary income. Everybody do till here. Calculation you can do later. That's not a problem. Let me know if you have done this. Very good. Calculation, don't worry. Calculation you can do after the class. Very good. Take a short break of 7 minutes. Take a short break of 7 minutes, then we'll continue. So we'll meet at 9:10. Go outside, look at the sun, take some deep breathing, and come back. Okay, guys, let us start. Let us come to the next question. Question number 2. It says, Jay is working with Infosys Limited at a basic salary of 6 lakh rupees per month. DNS allowance 20% of the basic salary. See, here it is written DNS allowance 20% of the basic salary, and nothing is written that how much forms part. So whenever we have to take this, that how much forms part, we will not take it, right? So if DAS is there, understand that DA is fully taxable. But wherever we have to take it forming part, we will not take it because nothing is mentioned that how much DA forms part, right? So DA is 20% of the basic salary. He was offered 1,000 equity shares of the company. So this is sweat equity shares. He was offered 1,000 equity shares of the company at rupees 250 each. So we are giving him 1,000 equity shares. On 1/4/2024, he was offered. He exercised the option on 15/4/2024. Okay. So on 1st April, we have offered him. We asked him whether he want to take it or not. So on 15th of April, he said, yes, I want to take it. He has exercised the option. And the shares were allotted to him on 30th/4/2024. And then, see, first we'll ask the employee whether you want to take it. You have to pay 250 for it. He said he will take his time. And then he said after 15 days, he took his time and he said, okay, I want to take it. Now, after few days, we will allot the shares. So we have allotted the share to him. So it was the offer date. This was the allotment date. And this was the exercise date. I believe everybody understood this, that these are the dates: offer date, exercise date, and the allotment date. Then he sold 450 shares. Now he's selling the shares as capital gain. He sold these shares at 80-85 per share on the stock exchange, and STT and brokerage was paid at 1%, 2%. Compute his tax liability as per the default tax regime. Market price of the share is. Okay, we have to compute the tax liability. So here we are having two income. One is salary income, and then thereafter he sold it. So we have the capital gain also. And we are supposed to compute the tax liability for this year. So I believe the question is pretty clear to all of us. Salary he is getting, capital gain he is having, although we'll be doing the capital gain in our next to next class, but still we just a small thing in capital gain right here. So let us start this question. Solution number 2. Computation of tax liability of Mr. J and this is assessment year 25-26 and he's following default regime. So he's getting salary, income under the head salary. Although not many components, only 2-3 components are there. One, he is getting basic salary. So let us write the list of it. He's getting basic salary, then he's getting DNS allowance, and then he's sweat equity share. That's it. 3 things he is getting. So he's getting basic salary, then DNS allowance, then he's getting sweat equity shares. Only 3 things he is getting. So since we have made the list of it, now let us write the amount, that how much would be taxable. For basic salary and DA, we know that 100% is taxable. So basic salary is 6 lakh per month. DA is 20% of his basic salary. So it is 6 lakh into 12, 48 lakh. DNS allowance is 20% of basic. You know that DA is fully taxable. So I believe it is 9,60,000. Correct? And sweat equity shares. This sweat equity shares is very easy. It's very, very easy, I'm telling you. See, what is sweat equity shares? The company is giving their shares to you. And they might be giving you for free. They might be giving you for little consideration also. Here we are giving a 250 rupees as consideration. We are not giving free. We are saying we are offering you 1000 shares and 250 each. We have to pay 250 per share. Okay. Now we have to see. So basic salary is correct. I made a mistake. Thank you, Deepak. Correct. And this is also would be changed now. 1440 now. Now correct? Okay. Thank you so much. Now, correct. Thank you guys. Okay. So basic salary DA we are getting. Now let us think about the sweat equity shares. Sweat equity shares, we are getting a facility. Let's say you are working with a company. For example, you are working with Wipro. Wipro is saying now today that we are giving you 100 shares of our company free. So is it a facility? Yes. So we will see that what is the market rate of the Wipro share. Let's say the market rate is 500 rupees share and we are getting for free and we are getting 100 shares. So 100 into 500, 50,000 rupees is the benefit we are getting. Same way. So you should know that how much is the fair market value of the share is. You should know what is the market value of the share is. And let's say the market value of the share is 500. And although the company is asking that you can purchase this share for 100 rupees only. So we are getting a benefit of 400 rupees in that case. So the sweat equity shares is very simple. You have to take the fair market value minus consideration paid. And if it is for one share, multiplied by number of shares. Just multiplied by number of shares. This is the benefit. I believe everybody is clear on this. Any doubt on this? Now I'll be telling you more on this. Okay. Now, understand the fair market value. Now, on 1st of April, this was offered to you. On 1st April, it was offered to you. So on 1st of April, you will see, okay, I'll take it or not, I'll think over it. Then on 15th of April, you finally decided, okay, let's take it today. Let's take it now. So on 15th of April, actually, when the employee was deciding, he must be looking at the stock market, that at what price it is right now. And on that particular day, he is actually striking. Striking means he is exercising it. So we have to take the fair market value of the exercise date. We have to take the fair market value of the exercise date on the day when we are exercising it. Because the day on which you are actually saying yes, you're striking it. So you must be having the idea that yes, this is the value of the share today. So not at the date of offer, not at the time of allotment, it should be the exercise date that it becomes your fair market value. It should be taxable as per this exercise date. Generally, in your examination, there would be one exercise date. But sometimes you know that on any day, let's say today is 26th of March and the market is open today. Today is what? Wednesday, na? Market is open and it will get, and in fact, it gets open at 9:15. You know that 9:15 market gets open. So that price keeps on fluctuating of the share. The price keeps on fluctuating. So at the opening, the price would be something else. Closing, the price would be something else. During the day, it must have went a lowest price. It might have touched the highest price also. So what price you have to take? Generally, in your examination, you might get one price. But in case they are giving you multiple price of that date, so you have to take here the average price. You have to take there the average price of opening and closing. Average of opening and closing, you have to take the average price. Guys, I will be telling you in the chapter of capital gain. If the share is purchased before 1st February 2018, then we have to take the highest price. I will be telling you about that later. But on sweat equity, always take the average price. Opening, closing, average. Now, in this question, they have given the opening price also, closing price also, highest price also. So we'll not take the highest price. Now it is 1st April, this is offer date. 30th April is the allotment date. But we are concerned with the exercise date. 15/4/24. So it is 570, 590 average. So 570 plus 590 divided by 2, 580 is the average price. Correct, Deepa. 580 is the average price. So in this case, 580, consideration you are paying 250 into 1000 shares. So 330 into 1000, 3,30,000. Correct. Very good. 3,30,000. These are the three components we are getting the salary. So if you will make the total, you will get the gross salary. You will get the gross salary. So it is 89,70,000. Correct, na? 89,70. Correct. I'm also getting the same. Thank you. This is the gross salary. Now, we have to give standard deduction always. And since the person is following optional regime, 75,000 would be the deduction. So his salary income is 88,000, 88 lakh 95,000. Correct. 8895. Correct. This is the salary income. Now this person is selling these shares also. First of all, see how many shares he is selling. He sold 450 shares. Guys, he has 1000 shares, right? But he's selling 450 shares on 31st March 2025 at 885. So he has received these shares on 30th April 25. He's selling these shares on 31st March. It's not more than a year. It's a short-term capital gain. It's a short-term capital gain, although I will be discussing this point in the capital gain chapter, but I think that you will be able to understand most of it. It's a short-term capital gain because we understand whenever we sell equity shares on stock exchange listed shares, we take 1 year. We take 1 year. After 1 year, it is long-term, but it is short-term right here. We got here, we are selling it in the month of March. And how much we are selling it for? 885 per share. And we have sold it on stock exchange. Securities transaction tax is also paid. So we understand there are two sections. One is 112A, long-term equity shares, 111A, short-term equity shares. And if they are sold on stock exchange, this is 111A, this is 112A. The tax rate is 111A today. After the budget, I will be telling you in the next to next class capital gain that after the budget, the rate is changed. So 111A is 20%, 1128 is 12.5%, but here 20% would be applicable. So let us first calculate that how much is the capital gain. So capital gain would be how we compute the capital gain, selling price minus cost price. full value of consideration. You are selling 450 shares, and each share you are selling it for 885. 885 is the value of the share. See, 885 is the value of the share we are selling it for. Third, 3,98,250. Correct, Aditya. Correct, Deepa. Shagna, good. 398,250 minus cost of acquisition. Guys, very important. In sweat equity shares, very important. Whatever is the value you have taken while computing your perquisite, 580, the fair market value, it becomes your cost. Very, very important. The fair market which you have taken, it will become your cost. So in case of sweat equity, please remember, right now I'm not explaining. Otherwise, if this would have been a regular or a fast track batch, I would explain why. But right now we don't have time that much. So for examination purpose, please remember whatever is the fair market value you have taken to compute the perquisite value, please make it your cost. So cost of acquisition is 580, 450 shares into 580, 261 Pradeepa. Okay. And cost of acquisition, cost of improvement, and expenses on transfer. Expenses on, see, improvement on shares, eventual improvement is not there. And in fact, this question is also there is no improvement. Expenses on transfer. Guys, please remember on shares, whenever you are selling it, securities transaction tax is not an allowable expense. STT is not allowed. So if you have paid STT, it is not an allowable expense. STT is allowed under PGBP. If had it been a PGBP income, I would have allowed STT. So STT is there under section 36. It is allowed as PGBP income. So let's say it is intraday trading, which we call it speculative business. Same day purchase, same day sale. That is called intraday trading. We call it speculative PGBP. There STT is allowed. But here in capital gain, STT is never allowed. What about any brokerage or commission which you pay to the broker, stock broker? That is allowed. So if you have paid any brokerage or any commission to the broker, that is allowed. Understood? So please keep this in mind, at least till examination, that STD is not allowed as a capital gain expense, but brokerage is allowed. Now, they are saying STT and brokerage are paid 1% and 2% respectively. So 1% is STT, 2% is brokerage. So 2% we will allow. 2% of what? 2% of the selling price. If nothing is mentioned, always selling expenses are on selling price. So actual selling price was 398. So 1% is STT. It will not be allowed. 2% is brokerage. So please allow 2% of 3,98,250. 7965. Very good. Very, very good. 7965. So this is cost of acquisition. Cost of improvement is not there. Expenses on transfer. And we got the short-term capital gain. Correct. 1,29,285. So this is short-term capital gain under section 111A. Short-term capital gain under section 111A. Now, salary income is this, capital gain income is this. Total is 90,24,285. This is my gross total income. And from this, there would be deductions, but here there is no deductions. 90 lakh 24,285. This is my total income. And we need to compute 90, 24, 285. Correct, Deepa. I'm also getting the same. Good. Very good. Now we have to compute the tax liability also for this assessee. The tax liability would be, see, how you will compute the tax liability? Tax on above. First of all, you have to see that whether this amount contains any special income. What is special income? 111A is a special income, 20%. 112 long-term capital gain is a special income, 12.5%. Casual income is a special income, right? So we have a special income. How much? 1,29,285. So how you will calculate it? Tax liability is on 111A 129,285. Guys, I have made a little mistake. My mistake is that I have to round off the total income also. Two things need to be rounded off: total income and the tax liability. Total income and the tax liability. So I should actually write it as rounded off 90,24,290. Understood? Correct. So now 111A. See, salary income is already rounded off. So it's only 111A which is not rounded off. So now I'm computing tax on this. So I will take it as 129,290. Correct now? Understood? So I will take this as, because salaries anyways it was round off, but this was not round off. So this consists of my this amount. So on 111A 129,290, I will take 20%. Two 5,856 or 8. Two 5,858. Correct. 25858. And I have no other rounding of. Okay, people got it. And now after we have no other special income, so on remaining income, we'll apply slab rates for the assessee. The remaining income is 88,95,000, 88,95,000. We'll apply the slab rates. And guys, you must be knowing it that in default scheme, see, after 15 lakh, we have to pay 30%, right? After 15 lakh. So I believe that you must be knowing it, but still, whenever you have to calculate tax on any income at slab rates, which is more than 15 lakh, I'm again repeating, whenever you have to compute tax slab rates on any income which is more than 15 lakh, so just simply do this thing to calculate it quite quickly. Just split this into two parts. One is 15 lakh, other is in excess of 15 lakh. Because on this excess, 30% would be there. And on 15 lakh, 0 to 3, then 3 to 7, 7 to 10, 10 to 12, 12 to 15. So you will see that the total tax comes to 140 on 15. So please remember that on 15 lakh, it is 1,40,000 rupees is the tax. Everybody knows it now. On 15 lakh, even if you will calculate the slab rate, you will get 140. I'm talking about default regime. And on the remaining amount, you have 30%. So what you can do is, you can divide this into two parts, 15 lakh, and the second part is, how much it would be? 73,95,000, right? So on this amount, you have to charge 30, don't write this. On this amount, you have to charge 30%. And on this, you have to, you know that it is 1.4 lakh, right? It is 1.4 lakh. So how you should do it? You can do it in just 10 seconds. How? See, if we have 88,95,000. So first of all, calculate this. First of all, calculate this 30%. So how you will calculate it? Just in your calculator, write 88,95,000. So I'm writing 88,95,000. This. I need to split this so that I can get this. So I will subtract 15 lakh from it so that I can get this. So minus 15 lakh. So now my calculator is showing this amount into 30%, into 30%, into 30%. I'll get 22 lakh 18,500 plus 140. Now because I got tax on this, plus 140 on this, plus 1 lakh 40,000 on this. 2358,500. Okay, let us do an exercise on it, one or two small exercise for next 10-20 seconds. Everybody, let's say, for example, not more than 10-20 seconds will do it. Let's say, for example, you have to calculate tax on 28 lakh slab rates. Now, do with me. Just it is in lakhs, so we'll take everything in lakhs. 1 lakh 40,000 also will take 1.4. First of all, everybody, write 28 in your calculator, 28. And now we know that 15 lakh need to be split and remaining should be there. So just 28. As of now, you are saying 28 in your calculator minus 15 into, when you will multiply the sign, you will get 13. That is the remaining amount. Into 30% or 0.3 is equal to, you get 3.9 plus 1.4, you get 5.3. Understood now? Okay, can you do this in less than 10 seconds? Calculate for me the tax on 36.4 lakh. Just on a calculator without using your pen. Just on your calculator without using your pen. Guys, because we don't have to show this to the, this is very, very basic. So we don't have to show this to the examiner in wasting time. You have to simply calculate the tax on it. 7.82. So how you have done it? Simple. Write 36.4 minus 15 into 0.3 plus 1.4. 7.82. Very good. Very good. I believe that you understood it. So we have taxes like this. Now do the total of this. The total would be, correct people, the total would be, these are the taxes, 23 lakh 84,358. Everybody got it? Correct, Aditya, Shagna, correct. Very good, Kishore. Now, what I should do? What should be the next step? Tell me what should be the next step. Very good, surcharge. Why? Because my total income is more than 50 lakh. Correct. My total income is more than 50 lakh plus surcharge. And you know that from 50 lakh to 1 crore, it is 10%. From 1 crore to 2 crores, it is 15. And more than 2 crore, excluding 111A, 112A, that I'll be telling you in the chapter of, because it is although part of the basic concept, but yesterday I was telling you that surcharge we will be doing with the total income. So don't worry about it. I'll be telling you more about surcharge. Surcharge would be 2,38,435 or 6. 26 lakh 22,000 793. Now my question to you is, whether you will check marginal relief over here or not. My question to you is whether you should check marginal relief or not. Will you check marginal relief or not? What do you think? Give me random answer also. Your answer can be right, wrong, doesn't matter right now, guys. Should you chart marginal relief or not? Yes or no? Aditya is saying no. Kishore is saying no. Very good. Very good. You should not check marginal relief. Why? See, because the difference is very, very high. See, what is marginal relief here? See, we have 50 lakh to 1 crore, 10%. And before that, it is up to 50 lakh. So if you compare 50 lakh with 90 lakh, so the margin is very, very high. So you should never waste your time in checking the marginal relief. See, you should check the marginal relief only if your income is little bit over and above that particular limit. So had it been, this is 50 lakh, had it been 51 lakh, 52 lakh, 53 lakh, I would have checked it. But if the difference is more, even if it is 54, 55, the difference is 4 lakh, 5 lakh, 6 lakh, and so please don't waste your time in checking the marginal relief. If the difference is little bit high, then only check it. So from 50 lakh, we are going to 90 lakh something. There is a difference, huge difference of 40 lakh. No point in checking the marginal relief. Very, very good. So marginal relief should not be checked. Plus 4% health and education cess you will add. And after adding the cess, I believe you are getting 27 lakh, 27,705. And you can round off 704 or 705, whatever you are getting. Correct? You can round it. I believe everybody has understood this. So we have in this question done the concept of sweat equity, something about capital gain, surcharge also. Okay. All done. Now, let us understand something about house property also. Everybody write with me. House property. I'll be telling you the difference between optional regime and default regime. Optional regime and default regime. See, house property computation is very easy. There is a fixed format for it. First, we compute our GAV, gross annual value. And guys, I'm saying that more than 95%, 98% are the chances. What is GAV? GAV is actually actual rent. GAV is actual rent. Please write this with me. Keep on writing with me. Actual rent or expected rent, whichever is higher. This is called GAV. 98% are the chances you will not get expected rent in your question. You will get only actual rent. So whenever you are getting this actual rent, please consider this as your GAV. You will not get expected rent. And I believe everybody know how to compute the expected rent. Expected rent is fair rental value or your municipal value, whichever is higher compared to standard rent, whichever is lower. Generally, very, very rare chances that they give it to you. Generally, they will give you actual rent. Please make your actual rent as your GAV. From your GAV, deduct municipal taxes paid. Only municipal taxes paid. Whatever is paid, Paid means during the previous year it should be paid. During the previous year means up till 31st March 2025. Our previous year is ending on this date. So any municipal tax which is paid up till this date, not even the due date of ROI, no. See, due date of ROI is a concept of PGBP. It is not a concept of house property, right? So whatever is paid during the previous year, that is up till 31st March 2025 by the owner. By the owner. So this, after deducting this, you get your net annual value, NAV. So whatever is paid. Even sometime, if the property is from outside India and still it is taxable in your hands. Guys, if the property is situated outside India, how can it be taxable in your hands? It might be possible that you are ordinary resident. If it is ordinary resident, global income is taxable. So outside property is also taxable. And the municipal taxes you have paid outside India also, that is also allowed, right? So if you are making it taxable, municipal taxes are also allowed. Or might be the cases the person is a not ordinary resident or even a non-resident, but he is receiving this rent in India. He is receiving this rent in India. So in that case, this could be taxable on the basis of receipt of income because it is getting received in India. It is not arising, but it is received. So anything which is received, it is fully taxable. So I want to say that if you are making a foreign property also taxable, please give municipal taxes also deduction as well. So you will get your NAV. Okay. You will get your NAV. After NAV, you give deductions. Deduction under house property. And if you remember the section, you can write section 24. Otherwise, no need to mention. As of now, you can mention it. Deduction under 24. So we have two deductions, 24A and 24B. 24A is standard deduction. 24A is standard deduction, which is 30% of NAV. And 24B is interest. Guys, please. All right. It is interest is allowed on due basis. Even if it is not paid, it is allowed. See, in PGBP, I'll tell you that if you have taken loan from bank, then it should be allowed if it is paid up to the due date of ROI, bank interest, financial institution interest. But here in house property, interest is allowed on due basis. Guys, interest has two components. Interest has two components. One is current year interest. One is current year interest. Second is, if you are in the first 5 years of completion, then 1/5 of pre-construction period interest also. 1/5 of pre-construction period interest also. And this is your house property income. This is your house property income. Now, first of all, tell me, have you made this? Always remember, I'll be telling you more about this interest. Interest is current year interest plus 1/5 of pre-construction period interest. Okay. Now, the difference in optional and default regime is only in case of self-occupied property. See, for self-occupied property, please write it over here. Difference only in self-occupied property. Guys, if you talk about the let-out property, I will say there is no difference. For let-out property, there is no difference. But in case of self-occupied property is only a difference. And that too, under 24B, that is interest on borrowing. If it is self-occupied property, then 24B, you don't give any reduction, nil. Under default regime, even if you have taken a loan for interest, there is no deduction. For let out, there is no problem, guys. For let out, there is a deduction. But for self-occupied, there is no deduction. But here, in case of self-occupied property, there is a deduction available, maximum rupees 2 lakh or 30,000 in case of repairs, renovation, etc. So it could be 2 lakh in the case of purchase or construction, 2 lakh if you have taken the loan for purchase or for construction, and for other purpose 30,000 rupees. If you have taken the loan for repairs, renovation, etc., then this amount. Understood? Now, guys, although this is not the part of house property, but it is concerned with house property also. I'm right now telling you set off thing. In set off, if there is a losses under house property, then what is the difference in set off? How we can set off? How we can set off? This I'll be telling you in set off chapter also, but right now since I'm discussing house property, so I'm telling about the set off also. In optional regime or in default regime, if it is same head, which generally we call it intra head. What is intra head? House property 1 from house property 2. If there is a profit in house property 1, there is a loss in house property 2, that is same head. It is allowed. It is allowed. Same head is allowed without any if and but, without any condition, whatever it is. There is no problem in limit. There is nothing. I have not written anything. So it is allowed, fully allowed, if it is same head. But if it is different head, that we call inter head. If it is a different head set off, what does it mean? It means that your house property losses, you are getting it set up from salary, or you are getting it set up from PGB, your capital gain or so. Then different head. Here it is allowed maximum rupees 2 lakh. It is allowed. You can set up from different head. See, in the same head, there is no such limit. I have not written any limit over there, but I am writing a limit over here. In different head, it is allowed, but maximum 2 lakh under optional regime. It means maximum 2 lakh you can set off. Remaining carry forward. See, let's say there is a house property loss of 2.4 lakh. So you can set off only 2 lakh, 40,000 carry forward. And here in default regime, different head, that is inter head, not allowed. So here in default regime, house property losses cannot be set off from any other head. Same head, it's okay. Same head, there is no limit also. But for different head, it is not allowed. So if it is not allowed, you cannot set off. It is always carry forward. So we will be carrying forward to the next year. So I believe that you have written it, and I'm not explaining much about it because it is part of set off. But just to introduce right here, because it is related to house property. Okay. Let us see this question. Mr. Aditya, a resident but not ordinary resident in India. He is a resident but not ordinary resident. Okay. See, if he is a resident, then global income is taxable. But if it's a not ordinary, then global income is not taxable. We understand anything which is arising in India, anything which is received in India, or anything which is controlled from India. Because for not ordinary, control word is important. For non-resident, control word is not important. Now, so Aditya is a resident but not ordinary resident in India. During the assessment year, he owns two houses, one in Dubai and the other in Mumbai. So he owns two houses, one in Dubai and other in Mumbai. The house in Dubai is let out at a rent of 20,000 dirhams, DHS. So if it is a foreign currency, don't worry about it. Okay. First of all, one house is in Dubai, other is house in Mumbai. See, Mumbai house would be taxable, but Dubai house should not be taxable. Why? Because he is a not ordinary resident. The house is in Dubai let out for this amount. They have given me 1 dirham is equal to 18 rupees. Guys, whenever you have foreign currency, don't worry about it. Do your entire computation in foreign currency, and at the end, once you get your income, multiply, convert back into Indian rupee. Got it? So I would suggest don't convert at each and every stage, but otherwise your calculation would be too much. You can do it, but it will take a little bit more time. So I would be recommending you, it is better that solve everything in foreign currency, and then at the end, whenever you have your income, multiplied by the conversion rate so that you can get your Indian currency. Good. So the entire rent is received in India. See, this line is very important. The entire rent is received in India. So although he is a not ordinary resident, I should not make his Dubai amount, Dubai income taxable. But since this income is getting received in India, so now it will be taxable. I believe you got it. Now, he paid property tax of 2,500 dirhams and sewerage tax of 1,500 there for the financial year this. So he has paid property tax and sewerage tax. Sewerage tax is a maintenance repairs tax, which we give to the municipal authority. So they both are municipal taxes. Sewer taxes, na? You must be knowing that sewer taxes, the drainage, etc. taxes also we have to pay. So this is nothing but municipal taxes. So how much he has paid? 2,500 dirhams and 1,500 dirhams. The house in Mumbai is self-occupied. Okay. He has taken a loan of 25 lakh to construct the house on 1st June 2021 at 12%. The construction was completed on 31st May 2023. Okay. And he occupied the house on 1st June 2023. The entire loan is outstanding. Property tax paid in respect of the second house is 2,400. This. Compute the income chargeable under the head income from house property in the hands of Aditya for both as per optional and default. Okay, we have to calculate for both the houses, Dubai also, Mumbai also. Why Dubai is taxable? Because it is received in India. Mumbai is anyways taxable because it is here in India. So optional regime, default regime. So guys, we cannot make two columns for optional and default right here. Why? Because we already have two houses. So if we'll make the columns for optional and default, then again, we have to split this optional in one is Dubai house, then we have Mumbai house, then Dubai house, Mumbai house. So it would be confusion. So let us do first by optional regime, and then we will be doing by default regime for both the houses. Understood? So house property income, and I have tried to include most of the things of house property in this question. Foreign house is also there, pre-construction is also there, so that you can have a good idea about the house property. Okay. Everybody start with me. I'll be taking some 15-20 minutes more, right? Is it okay to take 15-20 minutes more? Guys, it happens in the workout batch. It happens because I have a limited time. We have to do it. And it happens sometimes. Although I try to finish it in 2.5 hours. But generally in workout batch, it goes till 3 hours. Generally, you will find that every day it will go till 3 hours. It happens in workout batch. Okay. Uh, Solution number 4. Computation of house property income. Assessment year 25-26. Let's say optional regime. So we have two houses. One is a Dubai house. Everything is given in DHS, Dubai dirhams. And here it is Mumbai house. Here we have in rupees. First, we'll make our format. Always please remember the format for house property is fixed. So it is GAV, gross annual value. Then we have municipal taxes paid. Then we'll get the NAV. After the NAV, less 24A standard. Even if you don't remember the section number in examination, perfectly fine. Standard deduction, but you should know that 30% is allowed. 30% of NAV. Then 24B is interest on loan. And after that, we'll get house property income. This is the fixed format. The gross annual value is, let's say for the Dubai house, it is given. Now, he owns two houses, one in Dubai, other in Mumbai. First of all, Dubai house. Since the rent is received in India, so we'll make it taxable. The house in Dubai is let out at a rent of 20,000 per month, 20,000 dirhams per month. And the entire rent is received in India. He paid property taxes. That's it. And till here, Dubai house information is given and they are not giving any further information. Then here they started information regarding the Mumbai house. So first of all, finish up this paragraph for Dubai house. Then we will finish for the Mumbai house also. The gross annual value for Dubai house is 20,000 dirhams into 12. It is 2,40,000 dirhams. Municipal taxes paid in Dubai was 2,500 and 1,500. So it is 4,000, 2,500 and 1,500. So it is 4,000. And this is needs to be subtracted. Deeper, subtracted. Less municipal taxes paid. So you will get 236. Deeper, 236. GAV minus municipal taxes. Right? This is dirhams. 30% of this amount will get the deduction straight away. $70,800. No issues, Deepa. No problem at all. Now, it's good now that you're making mistakes here. So then you will not make a mistake in examinations. Now, interest on loan. We don't have any loan in Dubai house. So they were talking about the loan, but it was actually for the Mumbai house, right? For Dubai house, we have no loan. And 1 dirham is equal to 18 rupees. So now we got the house property income of Dubai house. It is dirhams 165, 200. And now, yes, we'll convert this into rupees. Now, finally, we can compute this into rupees. So multiply by 18. So we will get 29,73,600. Okay. Thank you. Correct. 29,73,600. Correct. Deepa, Shagna, Kishore. Very nice. No doubt till here. I believe everybody is okay with this. No doubt till here. Good. Now, let us come to the Mumbai house. The house in Mumbai is self-occupied. It is a self-occupied house. And for self-occupied house, we start with NAV. We start with NAV. So the NAV would be nil. So we don't consider GAV. We don't consider municipal taxes. In your examination, if the examiner is still confusing you that for self-occupied property, the assessee has paid municipal taxes, what we need to do of these municipal taxes? Nothing. Municipal taxes are not allowed in self-occupied property because the starting point is NAV. Because the starting point is NAV, so it should be nil. It should be nil. It should be 0. So somewhere they have also given that the property tax in respect of the house, second house is 2,400. So this 2,400 is have no relevance. If you want to write a note over on this, you can write it after this this computation that municipal taxes for self-occupied property paid is not allowed. Why? Because our starting point is NAV. Okay. So if it is self-occupied property, standard deduction is also 30% of nil is nil. And since it is an optional regime, since it's an optional, so interest on loan is allowed. Guys, if this would have been, see in default regime, my Dubai house has no change. In default regime, Dubai house has no change. Let out property has no change in optional and default. In default regime also, I will get the same amount. And I think that I got the answer of default regime. Why? Because in default regime, I will not get this also. So this value would be nil. So my default regime, although I was calculating for optional, but I got the answer for default. Everybody agree with me? So now we will not do default. So for default, 29,73,600, my question is done. For default, my question is done. Correct? Because we don't get interest on borrowing deduction for default regime. So here it will be nil, 29,73,600. Let out property is same in both. So for default, my question is done. Now, interest on loan. Maximum, if you take your interest on loan for self-occupied property, and if it is for purchase and construction, maximum you will get 2 lakh rupees. So he has taken a loan for construct the house. Guys, if it is reconstruct, 30,000 is the limit. For construction of the house, it is 2 lakh, or for purchase, it is 2 lakh. But for renovation, repairs, reconstruction, 30,000. Got it? Okay. Now, he has taken a loan on 25 lakh to construct the house on 1st June 2021. Okay. At a rate of 12%. The construction was completed on 31st May 2023. Okay. Everybody write with me. Although this is an easy now. This is easy now, but everybody write with me. I would like to tell you something regarding pre-construction period interest. See, this is the start date of the loan. Everybody keep on writing with me. This is the start date of the loan. And there is some completion date also. When the house is complete, there is some completion date also. Correct? Now, you have to see the previous year of this completion date, when it is getting completed. When it is getting completed, you have to see the previous year when it is getting completed. Let's say the completion date is, for example, 15th of December 23. So guys, this date falls in which year? This date falls in previous year 23-24. Right? This is the previous year where this date falls. So you just have to see that in which year this house is getting completed. Let's say this is completed on 31st March 2024. Let's say this is getting completed on 31st March 2024. Tell me the year in which this previous year belongs to, this date belongs to. You will say previous year 23-24. Guys, I understand this is the last day of the year. We don't care about it. We just want to say, we will just want to see that in which year this date belongs to. So this date belongs to this year. Agree? So I want to say you that whatever is the completion date, just see the year in which year this date belongs. And that, guys, before that previous year is only pre-construction. Before that previous year is only pre-construction. So let's say in this example, in this question, first of all, tell me, he has taken a loan of 25 lakh to construct the house on 1st June 2021. On 1st June 2021, he has taken the loan. I'll start, my start date of loan is 1st June 2021. Please write it. 1st June 2021. Correct? Completion date is 31st May 24. 31st May 23. Sorry. 31st May 23. So the completion date is completed on 31st May 23. So I will write completion on 31st May 23. To which year this date belongs? Tell me in which previous year. This is previous year 23-24. Everybody will agree? Say yes or no. Very nice. Very good. Correct. Everybody is okay with it. Guys, before this, tell me this year starts from 1st April 23. 1st April 23. Before that, it is pre-construction. So this year starts from 1st April 23. So my pre-construction period is before this date. What is the before this date? Before this year is ending on 31st March 2023. So my pre-construction period is actually this period. Understood? So my pre-construction period will start from 1st June 2021 till 31st March 2023. You have to, everybody understood? So this previous year, guys, even this would have been 31st March 2024, my date of completion. First, I will see in which year it falls. And before this previous year, my pre-completion period will end. Before this previous year, my pre-completion period, pre-construction period should end. Pre-period should end. So technically, it is from here till 31st May. but we will not see it that way. We'll see it as per the law. So we will see that in which previous year it is getting completed before that. So 1st June 2021 till 31st March 2023. So whatever is the interest on this, so it you have to see in this question. I think that it is straightforward. The outstanding is same. If you will realize that the loan is getting changed in this period, so you have to compute the interest of this period. If the loan is same, if the outstanding amount is same, then it would be easy. If the outstanding amount is getting changed in this period, you have to work it accordingly. That for how many months the outstanding was this, for how many months the outstanding was that. So you have to compute it accordingly. So you have to compute this pre-construction period, and starting from this year, this is the first year, first, second, third, fourth, fifth. Here you will give 1/5, 1/5, 1/5. Starting this is the first year, right? So you should see that whether our previous year is coming under these 5 years or not. So if it is coming under 5 years, then pre-construction would be there. But let's say we are 6th year of completion, 7th year of completion. So will you be computing pre-construction period? No, because pre-construction period will affect only the first 5 years, starting from the year of completion. This is the first year, second, third, fourth, fifth. That's it. So tell me. And the occupied the house on 1st June 23, the entire loan is outstanding. First of all, the entire loan is outstanding. So if the entire loan is outstanding, so it means 25 lakh into the rate of interest is 12%. What do you think the number of months are? Tell me the number of months from June 21 till March 23. And actually I calculated simply. I take just calendar years to calculate the number of months. It is your choice that how you compute your months. So how I compute, I am telling you. So generally I take it like this way. Generally I take it like this. See, 2021 is there, 2023 is there. So 2021 is there, 2022 would always be there, 2023 is there. In between, whatever year is coming, it will be there. So I take generally calendar years, this January till December. So from June till December, initial 5 months is not there. April, May, January, February, March, April, May. So we have 7 months here in 2021. 2022 we have 12 months. 2023 we have 3 months. So I believe you got 22 months. Everybody understood it? It is your choice that how you compute it. But I generally compute it like this way. Calendar years. 25 lakh, 12%, 22 months. So this is 25 lakh, 12% divided by 12 into 22. So this is 5,50,000 is the interest. And it should be allowed in 1/5. So 1,10,000. First year, second year, third year. And so. Correct? Guys, this was the first year. And for which year we are computing? We are computing for previous year. This is the assessment year. We are computing for previous year 24-25. So tell me whether we are in the first 5 years, whether we are in the family of first 5 years. Yes, we are actually the second year. Everybody understood? We are the second year. We are in previous year 24-25. So for us, this amount is relevant. Let's say if we would have been in third year, fourth year, fifth year. Sorry, if we would have been in 6th year, 7th year, 8th year, I am not concerned with pre-construction. This will not get, but now we'll get it. And I always say, guys, you will not make a mistake if you'll do like this. You will not make a mistake. So please remember, interest on loan divided into 2 parts. Current year interest. Guys, what is current year interest? Current year interest is the year which we are doing. Assessment year 25-26, that is previous year 24-25. This is the current year interest. So whatever is the interest of current year, previous year 24-25, this interest. And if we are in the first 5 years of family, then plus 1/5 of pre-construction also. So please remember, you will not do any mistake if you follow this. Current year interest means the year which you are computing for. We are computing for 24-25, previous year. And if we are in the first 5 years, pre-construction also. So we are in the first 5 years, pre-construction 1/5 is 1,10,000. And current year interest, since they are saying that nothing is paid. And now tell me whether you have to see whether the loan is here or not. See, if the loan is not there, current year would be 0. If the loan is not there from April 24 till March 25, the current year interest would be 0. Only pre-construction 110 would be there. Got it? But if the loan is there, if the loan was outstanding here, now you should ask whether the loan amount was same for the year or it was changing in this year. It might happen now. In April 24, the loan was different. In October, November 24, the loan was different. In January to February, March, etc., the loan was different. So you have to see that whether my outstanding is getting changed here or not. If it is getting changed, please compute your interest accordingly as per the outstanding. I believe that this is quite easy. You will be able to compute the interest. Now, in this question, they are saying the entire loan is outstanding till March 25. It means that till the end of this year, the entire loan is outstanding. So 25 lakh is outstanding, 25 lakh, 12% for complete entire year. So it is 25 lakh into 12% for the entire year, will get 3 lakh. So 3 lakh and 1,10,000. Total it is 4,10,000. Correct, people. So it is 4,10,000. See, if this would have been a let out property, I would have taken 410. But since it is a self-occupied property, maximum for construction, it is 2 lakh. So we have a loss of 2 lakh. As the only difference in default regime is that this would have been 0. So your house property income is this minus 2 lakh. Same head, no issues, same head, no issues, any amount. Same head, losses can be set off, no problem, without any limit. But if you are in different head, default regime not allowed, optional regime maximum 2 lakh. But here, same head it is. So your house property income would be 27,73,600. Correct. Understood? Guys, there are also other type of question in house property when, let's say, although I will be discussing it, I will be discussing at least 2-3 questions in total income where such type of question would be there. Everybody has done it. Guys, there are some questions in house property where you have different units. Let's say this is a house. Let's say this is a house. This is the ground floor of the house. This is the first floor. This is the second floor. Let's say ground floor is used for business. First floor is, let's say, self-occupied. Second floor is, let's say, let out. First of all, see, what is used for business is not house property, it is PGBP. Whatever used for business, it is PGBP. Although I will be discussing these type of, there are two types of, there are 2 questions in total income that I will be discussing with you in day 7, day 8 or so. But I'll be giving you the homework. That is the reason I'm discussing it right now. So if it is for business purpose, it is not house property. So this is, everything will go in PGBP. But self-occupied, this is an house property. This is an house property. Now let's say, now in that case, please don't take in house property, take these 2 in house property. But please take them as a different unit. Take them as a different houses. If they are using it for different purposes, please take that that particular portion of the house as different. So let's say if it is 3 floor, then it is good to take all the expenses, all the income by 1/3, 1/3, 1/3. Now, let's say in your question it is written that the assessee has paid 60,000 rupees as the municipal taxes. So for the entire house, so 60,000 he has paid, one third, one third, one third. So 20,000 will go here, 20,000 will go here, 20,000 will go here. Everybody understood? This 20,000 relates to PGBP. So we will get this deduction in PGBP. These two are related to house property. But you understand, for self-occupied property, we start with NAV. We don't give municipal taxes deduction. So you will not get this. You will get only this 20,000. I mean to say that all the expenses which are incurred for this house should be treated accordingly, divided into these parts. And then you have to see where it is allowed. So if it is 60,000 municipal taxes, 20, 20, 20. So this 20 will go in PGBP expense. These two are house property. But for let out, we get the deduction. But for self-occupied, we don't get it because we start with NAV. Understood? Understood? Let's say there is interest on loan. Let's say interest on loan. For example, 9 lakh is the interest. And this is one third, one third, one third, let's say. So it is 3 lakh, 3 lakh, 3 lakh. This 3 lakh related to ground floor, it is related to business. You will get deduction under business, PGBP. Correct. This 3 lakh let out interest, you can get it. No problem. Entire amount. Even it is more than 2 lakh, 30,000 doesn't matter. Entire 3 lakh. But what about this 3 lakh? If you are following default regime, self-occupied, you will not get. If you are following optional regime, maximum 2 lakh. I want to say that if there is a property which is divided into different units, you have to take it differently. You have to take it separately. Agree? Everybody understood it? Let's say there are some repair expenses. Rupees 30,000, 10,000, 10,000, 10,000. This 10,000 you will get in PGBP. But what about these two? See, repair expenses we never get in house property. We only get these reduction. The format is fixed. Where you are seeing repair expenses. That is the reason we give standard deduction 30%. So we don't take any other expenses. We only take municipal taxes. We only take interest on borrow. See, in house property, we don't take repair, insurance, other expenses. For everything else, we have 30% standard deduction. That's it. So if it is repair expenses, so I'm again repeating, 30,000 is the repair expenses. 10 here, 10 here, 10 here. You will not get here, you will not get here because there is no separate expenses which is allowed in house property. It is only the fixed format. Repair expense is not there. But this 10,000 you will get in PGBP. Are you getting it? Don't worry, I'll be discussing this thing in the total income questions also. But today I would like to give you a homework. Today homework is, I'm not giving you much. Today homework is, you can get this. I believe that everybody has access to the Google Drive, right? So this is uploaded on the Google Drive. You can get it. Today homework is question number 7 and question number 8. 7 and 8 is your homework. Yes. One question of salary, one question of house property. So 7 and 8 is your homework. Thank you so much, guys. We'll meet tomorrow at 7:30. And generally, please keep in mind that in a workout batch, we can stretch half an hour, 3 hours. Bye. Take care. It was a wonderful session with you. Bye. Take care.